I think earnings season, Brian, because I think that it's going to be probably stronger than expected. You know, most analysts last fall were thinking we'd see 10% earnings growth for this year, and then of course we seem to hit this soft patch, and a lot of analysts lowered their expectations down to roughly 7%. But you know, Fed Chair Powell yesterday obviously came out and said, hey, the Fed is not really seeing any signs of a slowdown. So I would tend to be at the upper end of that range for the year. And I think we're going to see a pretty good earnings season. And as you said, it really gets underway next week.
Yeah, but you know, we saw what happened with Macy's yesterday, Rob. I mean, they missed by a sliver, and the stock fell 18%.
Well, yeah. Well, that's the problem. That if we're in an environment now where investors are really looking for some evidence that maybe a slowdown is right around the horizon. So even if a company matches earnings estimates but gives poor guidance, or they miss on revenues, they're taken out and basically shot in some ways. So yeah, it's companies better at least meet their expectations.
Do you think they will?
I think by and large, yes. I mean, usually we see more beats than misses, as you know. But I think we'll see even more beats than expected than misses. I do think this is going to be a pretty good earnings season.
Should we buy small caps? They're in the middle. I mean, they had a lousy end of the year, but the best 2-week run in years. Are they still a good value, Rob?
I think so. I think so. And part of my thesis there is that I think the dollar is going to continue to nudge up from here. That hurts big cap multinational stocks, and conversely should help small cap stocks. So I would overweight small cap growth stocks. As you said, they did have kind of a difficult run, but I think going forward they should look attractive.
So if somebody looks at their portfolio, and everybody, by the way, it's the beginning of the year, you should take a look at your portfolio, and you got 40% exposure to international stocks and 30% to small cap U.S., you need to trim Europe and raise American domestic small cap.
Yeah, and that's kind of the flip side of a rising dollar, is that for U.S. investors invested internationally, it's gonna hurt those international investments. So the swap that you just described would make sense to me. Absolutely.
Any reason at all whatsoever to own either bonds or, gasp, dare I say it, T-bills?
Well, I do think that when we of course profile all of our clients, and some are more risk tolerant than others, and obviously if a client of ours kind of profiles out at being very risk averse, then bonds do have a place in a portfolio like that. But I would certainly overweight stocks here versus bonds.